Darren Stone says finding a bargain in Perth's housing market is now near impossible. In the early 2000s, the self-employed builder purchased an investment property close to his home just north of the city's centre. Now he's looking to buy another.
It's certainly a competitive market out there at the moment to buy new sites. Anything you look at the moment, there's definitely a piece of overpaying going on in certain sites.
Low interest rates and generous tax breaks have encouraged more investors like Darren to pile into the market. Last month, house prices rose 1.6% across the country. Prices have leapt 16.1% over the past year, making it the fastest pace of growth in over 17 years.
It does now seem that investors, combined with second-time buyers who are seeking to upgrade their homes, are once again squeezing would-be first-home buyers out of the market.
Of the 2.2 million Australians renting out at least one property, 1.3 million declared a net rental loss in 2018-19. Most landlords have one property they negatively gear, but there are thousands who claim the tax break on at least 6. Economists say when rates begin to rise, that could pose a threat.
Well, the risks, as were clearly exposed during America's housing meltdown in the lead up to the global financial crisis of a dozen or so years ago, is that people who go into home ownership with very thin margins of equity can be in serious trouble if house prices fall, and can also be in serious trouble if interest rates go up significantly.
Last week, Labor ditched its policy on negative gearing and the capital gains tax concession.
We took these policies to the last 2 elections. They didn't find favour with the electorate. We've got to sit back and have a look at why and ensure that we can put policies which are going to find favour with the electorate but also deal with the issue at heart, which is housing affordability.
Australia's not the only country with unaffordable housing. In New Zealand, house prices have leapt by about 30% over the past year, but its government has axed their version of negative gearing in a bid to cool investor demand and make it easier for first home buyers to enter the market.
If you took away some of these tax concessions, it's not going to be a silver bullet for affordability. You might only wipe a couple of percentage points off the overall price. But what it does is mean that you're going to have more home owners in the mix and fewer investors.
The Property Council says modelling it commissioned from Deloitte Access Economics shows cutting these tax breaks would hurt the economy.
It would pitch up rents, it would have an impact on construction, and it would have a big drag on economic growth, a $1.5 billion impact on GDP.
Afternoon, I'd like to inquire about that 4x2.
Darren hopes the tax breaks are here to stay to ensure the investment delivers the financial return he needs.
If that advantage is taken away, then you'd really have to look closer to make sure the metrics in terms of the income you're going to produce.
His property is positively geared thanks to low interest rates, but it won't stay that way forever.